Hi there, it seems like I'm streaming. I want to check whether I'm streaming or not on YouTube. So kindly do message me whether I'm live or not at the moment. And hope you all are doing well. And let me have a look that whether I can share screen and do this live streaming in this manner or not. So do send me a message if you can hear and watch me. I'll have a check on my mobile whether I am visible or not, or is it working or not. So just checking this new way of streaming live with the screen, and then probably we'll have this once or twice a week doing this. So let's see if this works out or not. So we'll see. We'll see. I think it's working. So let's get things going. So basically, this session is all about how I analyze different types of stocks. So I hope you're able to have a look at the screens, and I can share the screen here. So this is a company Titan that I'm taking, and this is just a test stream I'm doing. So I'll do a number of sessions like this if this works out well. So this is how I look at a company, whether that company is relatively cheap or not, or relatively it is at a buy level or not. So I'm just trying to make you understand that. Uh, I hope you're able to uh, have a look at the screens and everything pretty well. So coming to the fact that how does this work? So if you look at Titan, a very renowned brand into the jewelry segment and has diversified into a number of segments. What I'm trying to find out here is, suppose I want to buy Titan now. There are a number of things I look at us when I look at a stock, whether to buy into it or not. And even if they are renowned companies or larger companies, I've taken example of Titan here, but if you pick any of the companies, there are some 4 or 5 points that you really need to take care of. One of them is, the first and foremost thing I look at is the management pedigree and the best of the stocks that I have to pick. So I have, you can say, shortlisted around 30 to 40 companies, and that is in there in my, you can say, Patreon, on my Patreon website, where you can have a look at these companies in detail as to which companies. And they have around, and we have around 20 companies which are small caps in nature, and we have around, you can say, 20 more which are larger in nature or large cap in nature. So this is where probably Patreon members do get a lot of help because of the fact that I bring to them these sort of companies. So I'm going to Screener now, and so what we are trying to do here is trying to find out whether a company is of value, and how do value emerges in a company which becomes expensive at one point and then becomes valuable at the other point. So if you look at Titan, the market cap is around 210,000 crores. That's 210,000 crores, and the company is trading at, the stock is trading at 2370. I find this at a very attractive level at the moment, and there are 4 or 5 points why I believe that. So and Screener is a website, and there's no promotion, so I won't say that any promotion I'm doing here. But Screener is a website which gives me a lot of comfort with respect to getting all the ratios, etc. So if you look at the price, although the price hasn't dropped much, so if you look at it from a 5 year basis, it has gone up a lot. But if I just reduce that to around 1 year, then if you look at from 1 year basis, the stock was trading at around 2400. The stock is trading currently around 2370, 2400. So there is not much of a difference. The stock is down probably a percent or 2 percentage points in the last 1 year. So People may say that it's still expensive because the stock has not gone down that much. There's no value. And if you look at it in the last 1 year, there was a point when the stock was trading below 2000. That was around June, when everything fell, the mid and small cap, even the large cap. So probably people or retail investors might wait for those 2000 levels to probably buy into this company. Now that is where people do make mistakes, who get into this bandwagon of buying something extremely low or looking for 52-week lows to buy into. If you look at value, when we look at value in a stock, we look at how the earnings have panned out and what kind of a PE ratio, etc., that it is trading at, even you can say price to book and market cap to sales. So what I look at, especially in companies which are marquee in nature like Titan or DMart, etc., is whether their PE has shrunk from the peak PE or not. So currently Titan is trading at a PE of 66. Now we have to look at two things. First, how has been the earnings growth, and what kind of a PE it is trading at currently. So if you look at quarterly numbers, then the September quarter, you look at consolidated numbers, uh, the company did, you can say, sales of around 9200 crores. If you look at these numbers in September, and it did sales of around 7500 crores uh, a year back. So this has been a growth of around 1600 crores on something like you can say 7500 crores or so. This is a 21% jump in sales. Now for a company which has a market cap of over 2 lakh crore, doing a growth of 21% is pretty phenomenal, with margins of around 14%. And if you look at 1 year back, the margins were around 13%. And if you look at the whole trajectory of margins from September 19, which was before the pandemic, which was around 11%, you got to understand, and you get an idea that the margins have consistently grown even in tough environment, apart from extreme pandemic situations, where the margin dipped into negativity, and later on was remained around 7%. But even in FY22, things were fine. And again, during the second wave of the pandemic, it went and it dipped to around 4%. But look at the way it has recovered: 13%, 14%, and again back to 14%. So over the last 3 years, this is the peak margins that the company is trading at, and the stock is down phenomenally. Relatively, I would say stock has done nothing over the last 1 year, although the company has been doing pretty decently well in terms of margins. And if you look at final profitability after other income and interest costs, etc., which is negligible at the moment, they did profits before taxes of around 1140 crores versus in September of last year of around 870 crores. So how much has been the, you can say, the growth in here is around 370 crores, which amounts to more than 30%. Exact figure would be something like, so let me calculate that in a rough idea as to how has been this figure. So 1140 crores roughly they did this time around versus last year of around 870. So this has been a jump of something like 31% growth in profits, and a tremendous growth in sales. And yet the stock has not gone anywhere, probably because there has been a PE derating of most of the marquee stocks we look at all around. And this is where the thing is: if something is growing at 32%, and which is a marquee brand which has been doing well, and next thing probably you need to look at, another thing that you need to look at, which I may forget before I move forward. There are two things here. uh, if you look at their balance sheet, you look at the reserves from around, say 4 or 5 years back in 2017, they had reserves of around 4,000 crores. Their reserves have grown to around 10,000 crores. Reserves have more than doubled, two and a half times of what it was last time around. And the final thing that you need to look at, apart from cash flow, etc., which you can ratios, but I'm just giving you a simpler idea of how to look at a marquee company to buy into. So if you look at the shareholding pattern here, FIIs have increased holding in December by around 50 basis points here, and DIIs have reduced, but FIIs have increased holding, and relatively the public shareholding has remained the same. So what has happened here is that not much of a selling of large investors, marquee investors have taken place. In fact, people have accumulated the stock, uh, reserves have increased appreciably, and margins have come back to pretty much where they were 3 years back, and yet the stock has not done anything. So what will happen is that finally, if you look at the EPS, 9.36 this time around 8.8 last quarter. So this has been around 18 rupees EPS. And if you look at probably December would be the best quarter in line. If I probably, you can say, extrapolate these numbers by around even 30%, the December and March numbers, then you'll get around 14 and a half rupees. If it was 11.3 rupees in December 21, it should be around 14 and a half rupees at least for December this year. And it could be similar to closer to something like 8 rupees or so for the March quarter. So we are looking at 22 to 23 rupees of EPS coming in more apart from the 18 rupees that we are in. So around 41 rupees of EPS for the year FY23 is what we expect. And in 41, 42 rupees of EPS, if the stock is trading at around 2370, which is the current, you can say, value. So 2370 divided by 42 is around 56 times. It is trading at around 56 to 60 times forward earnings. And that is where the value is. So it is not trading at 67 times. Forward earnings could be around 57 times. And that is where big value emerges, because if you look at on the screen of website and you look at the PE ratio, its historical PE ratio for the last 5 years, the average has been around 78. And as I mentioned, if you extrapolate the numbers and if the numbers came out to be what we envisage, then it would be trading at around 56 times forward earnings, whereas the average PE for the company has been around 78. So once this problem in the US and Europe curtails away, and over the next 6 to 8 months it should happen, all these stocks will surge. So something like a, you can say, Titan could be trading back again at 70 75 times, and if you multiply 40 42 rupees with that, we are looking at 3000 on the stock in a year and a half. That is how I analyze most of the companies. It is a pretty simple way of analyzing, but at the same time you get to understand and you get to know that you can pick very good quality companies at reasonable valuations. Can it fall? It can definitely fall, but the valuations are becoming much better now. Even if you look at price to sales, if I go further into it and go to market cap to sales, it is trading at somewhere around 5.8 times sales at the moment, and its average is around 5.7, 5.8. So it's not expensive at all. Yes, 5 to 10% decline, nobody can rule that out, but one can definitely accumulate. Now, how I analyze large cap companies is totally different from how I analyze any micro cap or small cap. If you really want to know that, kindly do let me know in the comment box. I'll definitely make a detailed video on it. This was just a test video that I wanted to do, in which I can probably live stream along with, you can say, sharing the screen, and also letting you know as to how things go about when you probably uh, analyze any stock, or do any stock in that manner. So this is about the Titan. I can do probably analysis on most of the companies in this manner, and that's how I pick stocks, and normally they do work out pretty well. Hopefully you liked the video. If you have liked it, kindly do share and subscribe to my channel and hit the bell icon. Today I won't be taking any questions, so sorry for that. But if you like the way I have streamed here, and probably this is the way you want it, next time around from next week onwards, I'll do the same going forward as well. Thank you.